Good evening, guys. So in today's video, I'm gonna take you to the trade I took today. Even if the market conditions weren't that good, I still managed to take a good trade and make some money. So I'm gonna walk you through the steps that got me into taking this trade, and so we'll just analyze this this position that I took. So starting from the daily chart here on USD JPY. So the market was overall bearish, but we just touched an important level down there and we were looking to retrace a bit. So I was bullish, I was looking to buy. Okay, so I went down to the 50-minute time frame. I saw there was an important, as you see, between the New York Open at midnight and the New York session open, an important low got created down here. So I was interested in taking this out and then going long because there were also some equal highs here. So I went down on the 1 minute chart, waited for 9:30, which is my session open. Then it opened, started to go down, reached my level. I waited for a fair value gap to be created. As you see, this one green rectangle is the fair value gap that got created. As soon as it got touched back, I entered the market, put my stop loss below here, I take profit at this recent high with a 2.58 ratio. As you see that the trade is real because we have this blue arrow, which means I bought 900,000 here and I sold 900,000 here, so the trade is completely true. As you see, then the market kept on going higher, but I got out just here, making myself a good profit of 900 US dollars on my demo account. So virtual profit in 13 minutes. Okay, so not that bad, not that bad. You see, 13 minutes. By the way, what was the main concept I used in this trade, for this trade? So I used daily bias, but not even that much on this one. I used the fair value gap, as you see. I used liquidity sweeps because this was equal lows. Then what I used was power of 3, as you can see. Now I'm going to explain to you what is power of 3. So let's start by saying that the market, before making a big move, and the market always has 3 phases. It has a consolidation, it has manipulation, then it has distribution and consolidation. These are the 3 phases that the market has. So we can see them here. How do I spot them? I spot them by looking at like drawing 2 lines on my chart, 2 vertical lines, these blue lines. One at 00, so midnight New York time, and one at 9:30 New York time. So I look at what happened. I draw the high during this time and the low. So I see that the market, before doing its actual move, it wants to get down. So if the market needs to go up, it will break this low before going up. So this was exactly what I was looking for. It broke this low and then got up, as you can see. For example, going on another day, this was the situation. Drawing the power of 3 method, we would have these things. So here it is, and here it is. You can see the market, before going down, it went up, took the high, and then got down. Okay, this is what we can see, seeing the past experiences. So the market has this phase, which is the one we are looking at to understand our levels. Then it has this phase, when it sweeps our level, which is the most important one, and then it has this one in which it actually does the move. Okay, so this is power of 3 method. I want to enter here. So I'm gonna explain it a bit more deeply, um, because tonight I don't have that much time. It's also late already, so maybe on Sunday when I have time, I'll bring up a full video explained with good text and everything for Power of 3, because you absolutely need to understand this concept. It's really important. So this was all for tonight. I'm sorry for the probably confusing explanation. So I hope you liked the trade I took, and this was all. Be safe. Have a good evening.